How's it, guys? Welcome back to FX Rhapsody. Today I just wanted to look at a couple of trades, two trades in the one trade in the British pound US dollar, one in the British pound Japanese yen. Before we go there, just go visit my website. You'll find a lot of interesting things on my website. I'll put a link up there that pops up, so just go click on it and it will tell you all about my website. Okay, back to the charts. Now, when I did my analysis over the weekend on the British pound or US dollar, this is the one we're starting at. I was saying that, I'm just going to scroll out a little bit more. I was just pointing out that we had this downward movement or downward trend line, and I was saying that price might go up and touch that trend line again and maybe break it, maybe not. What I did was I also highlighted a couple of key areas. The first obvious one was obviously the bottom as where price turned. And then I also, let's have a look here. I also highlighted another one. It was around about here somewhere. There we go. That's another area of interest in the market. And then I also highlighted this little one here. Let's just do it kind of like that right there. I think that was pretty much what I did, and I think there was one or two more that I pointed out to you guys. The start of the week was here, so if memory serves right, around about here somewhere, this is where I start my analysis. I also looking at that as well, I just highlighted this section over here saying that price is in that area. Okay, let's just do that. Let's just expand this and make it bigger. There we go. So basically this was my analysis, and I was saying price might break this area over here, come back and go up. So obviously looking at what basically you can see, this is what happened. So I was looking at, obviously this is where market opened up. All right. So that's the area that opened up. And I was looking at this swing low. So, and I saw that price open up, and this, like I said, I highlighted this key area. You see that price bounces off it once, comes up, and it comes and bounces off it again, basically tapping liquidity that's below this. So then price moved up again. So this is where this piqued my interest. So then I take my Fibonacci from this low and I placed it to that high over there. So you see price going up, coming down to retest it. Now, for those of you that haven't watched my Fibonacci videos and the way I trade it, link will pop up at the top here. Just go click on it, go watch it, and you know, I'll explain exactly where I place my trades and how I place my trades. But so I'm always waiting for price to hit that 62% area at least before I will place a trade, be it buy or sell. So as you can see, price coming down did not hit that 62% area. Price just pulled back and carried on. So that was a no trade. So what I do is I leave my Fibonacci here. So I wait until price comes down again. So price moves up. So this will be my next high. Okay, right there. Price moves down, comes up, doesn't get close to that. And then all of a sudden it makes this huge spike candle going up. So that will be my next high. So now I'm sitting and waiting. Patient game in trading is vital. Be patient with your trades. Don't just climb into a trade when it gets close to, like you saw this one here. I could have climbed into this trade, didn't have to. I'm patient. I'm waiting for my entries. Like you can see here on that one, price started moving down, and lo and behold, bam, taps that 62% area, and that is where you climb into your trade. And that is exactly what I did. So basically That's your entry. Stop loss over here. A little bit of a big stop loss. But again, look at that. Price moving up, 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 up. 66 pips, basically. And what did price do? Let me just take this out. We had this trend line over there. Price came and tapped that trend line and then started moving down again. Now, this is now also all up to you. If you are a person that holds your trades, you can hold it. I mean, just bear in mind your stop loss. Look at this, price moved up to the upside. For me, that's enough. It doesn't have to hit all your targets. Your first target, this obviously hit the first target. It doesn't always have to go back to you or go hit your second target or third target. Just be mindful of when you trade. I made a nice video about the psychology of trading, and in there's a trading plan. Put a link up here as well for you guys. Just go watch that video. You only need a certain amount of pips. It depends on yourself. Be it 20 pips a day, be it 30 pips a day, be it 60 pips a day. It's all up to you how, or a week, or whatever the situation, depending on your lot size that you trade. So set yourself a target and then trade according to that. And then you will not overtrade or be in a trade all the time, or want to be in a trade all the time, be that FOMO situation. But definitely use that trading plan. In any case, so I mean, this was a 66 pip trade. So basically, that's it. It's as simple as that. From the Fibonacci low, swing high, coming back 62%, bam, there's your trade. Easy as that. And if the guys that held it, you know, it might have moved to the upside. While I'm talking, sorry about the noise. I mean, it's rain is pouring outside, so just if there's any weird noises going on in the background. Any case, let's move on to the next pair that I want to show you. The British pound, Japanese yen. So British pound, Japanese yen was in actual fact a very, very nice trade this week. Let's just pull this vertical line. I always like to just kind of show you where basically where the no, that was my previous one, basically where the week started. So basically, so we have got, this is where the week started. What I did was, I think in my previous analysis, I had, let's have a look, where did I pull my lines? I'm just drilling out a little bit more. So I had it over here. There we go. This was a key area of interest for me. Let me just draw it all the way to that side, and it's around about there. And I had it, let's go here. As you can see, that's a very nice point of interest, especially for that previous week. We had a lot of support, turned resistance, and then as the week, before the week started, we had analysis made here. So basically what I was saying, I was waiting for that break. It was the break of this key area, retest, and then price shooting up. And I mean, this is exactly what happened. So again, patience is key. So basically the week started off, price breaking that area, pulling down, breaking it below it again, coming up, and eventually just started retesting it when it was, then when it broke above that. And that is where you place your entry. Yes, you could have tried to place it here. Let's just have a look. If you had a Fibonacci from the week before, and nah, not at all. It wouldn't have happened. If you had to place your Fibonacci over here, from this low to that high, no trade whatsoever. The trade came when price broke above this. It stayed above that, then it went up, it came back and retested that for the first time, and then it came to retest it for a second time. Now, once it retested for a second time, it did not, well, basically a third time. So you can see it broke above it right there with that bearish candle that came down, pulled back, and then closed above it. Then we had these couple of bull candles, meaning there's a movement to the upside. We had a nice bearish candle touching that area again, and a couple of bearish, and then the bullish market started. The bullish movement started basically, and that is where you take your Fibonacci from that low to that high and expand it a little bit, and you can see right around that area is where you place your trade. So again, Fibonacci, not the Fibonacci, this weird tool of mine, or the tool of the buy or sell tool. This was a 20 pip stop loss. This price just shot up, like you see. So basically, the first one, it just broke through the first target of 31 pips. It just flew past the second target of 56 pips. Then it came back again. And it started motoring up to your third target of about 80, 81, 82 pips. So as you can see, I mean, price just flew. And again, it's just easy as that, guys. So that is what it is. Price breaking above the structured area that I was talking about, staying above it, and as soon as price made that big movement to the upside, the two big bullish candles, pull your Fibonacci from this low to that high, wait for the retracement, place your trade, and bam, off she goes. So guys, definitely keep an eye on this Fibonacci, or try or practice this Fibonacci. Do not throw it away. This is a very nice tool. I'm not saying this is the tool to trade with, but please use it in your trading. It is definitely going to make a world of difference when it comes to profitable trading. And please be patient when you trade. Do not just go into a trade. Don't have that fear of missing out. You will have your setup. It will come to you if you are just patient. Otherwise, you're just going to lose all your money. So that's all from me for today. Hope you guys caught these trades. Hope this makes sense to you. Hope it helps you with your trading. And again, just go watch those videos. Go watch that Fibonacci video. Go watch the psychology of trading. All these little videos just helping you build your mindset around trading and how to just use these tools to better yourself in trading. Enough ranting from me, guys. I hope you're having a wonderful day. Stay safe and happy trading.